Hi guys, Doc Severson here with Ready Set Crypto. I've been trading for the last 22 years, traded stocks, options, futures, cryptocurrencies, Forex. Regardless what I've traded over the years, the one headwind that we've always had has been trading commissions. Commissions to get into a trade, commissions to get out of a trade. When I first started trading stocks with Charles Schwab, it was 29 bucks to get in and 29 bucks to get out. Tough to make money with that amount of friction for the trade. Now things are better than they used to be with regards to commissions, but still, it's that one common theme that no matter what happens with a trade, the broker always gets paid. That's why the project that I want to talk to you about today caught my eye, as it has the potential to be extremely disruptive in the crypto space going forward. Digitex Futures is going to be releasing in late 2018, and what makes them different is commission-free trading on their futures exchange. They do this by requiring to use the Digitex token or their own cryptocurrency token to allow for commission-free futures trading. In the rest of this video, I'll give a brief representation about how this project works, and then we'll talk to CEO Adam Todd of Digitex to talk a little bit more about this project, as well as to ask him my questions. Let's get started. All right, how does all this stuff work? First of all, let's provide a visual anchor for all of this, and then I'll show you a representation of a trading ladder to show you how you would trade futures contracts. Let's reference Digitex against a couple of examples that you already know. When you were a kid and you went to a gaming arcade, you know, the kind that had all kinds of different games like skee ball and shooting galleries and other rides, could you just walk up to any game and stick some money into it and play that game? Usually not. You had to exchange your money for game tokens at the front door. You see the same principle in action with fair rides. You have to buy ride tickets. You can't just walk up to a roller coaster and plunk down a $5 and get on board. This is the notion of a contained ecosystem market, where you exchange your money for tokens at the door, utilize the value of those tokens, and if you're lucky, walk out with a big stuffed animal. The same thing happens in a gaming casino. You exchange your cash for poker chips, play a few hands, and then cash out when you're done. You exchange your chips back into fiat currency. The game itself has its own native currency. Many different economic models have sprung up which are similar to this, such as the notion of Disney dollars when you visit a Disney park, which seems like play money at the time until you reconcile your bill when you leave. So we can think of Digitex in the same manner when it comes to their Digitex tokens. To trade within the exchange, traders must exchange their current sovereign fiat currency eventually for Digitex tokens, or DGTX, in whatever manner that's most appropriate for them to get there. The eventual plan is for these tokens to be distributed on the Ethereum blockchain, which we'll discuss with Adam in a few minutes. Any gains or losses due to your trading on the futures exchange will either increment or decrement your number of DGTX tokens. So that's the overall concept of Digitex as I understand it, albeit massively simplified for now so that we don't attempt to boil the ocean. What I'd like to show you now is a representation of the ladder interface that traders will be using to place trades in the Digitex Futures Exchange. At this point, what I want to do is I want to give a very quick example about what a depth of market or a ladder type interface looks like. Please keep in mind, this is not the production interface that Digitex will be using. This is just a mock-up that they've used in the past. I'm not privy to what their current interface looks like, but let's assume that it's going to look something like this. All ladder interfaces look somewhat like this, and they have the same features and functions. So if you've never used a ladder interface or depth of market interface like this before, this section is for you. If you have used one before, you can skip right past this. Let's walk through the various sections of this interface first, because again, like I said, they're all going to be fairly close. So the actual production interface for Digitex will probably look something similar to this. The first thing that we'll see is the actual contract specs over here. So we want to make sure that we're trading the right contract. In this case, this is Bitcoin versus the US dollar. It's going to show us what the tick size is. We'll get to the tick size in just a minute. It's also going to show us the initial margin for that trade. So in other words, how many tokens do we have to have credited to our account before we can even place the trade? If we don't have an initial margin of at least 20 Digitex tokens in our account or attributed to us, then we can't place the trade even for one contract. So for any interface, it's going to have the contract specs up there. It's going to show you what you are trading and what the tick size is for that. The next section that we want to look at here is in this area, and what this is going to set is your leverage or the position size for the trade that you're taking. So in other words, right now it's defaulted for one contract. So we're going to place one contract, either long or short. Again, we'll get into that explanation in just a minute here. But if you want to trade something bigger than that, you can select 5 or 10 or 25 or 100 or even 1,000 contracts for this if you have the initial margin to be able to place this trade. So again, the initial margin is 20 per contract. So if you wanted to place a 1,000 contract trade, there'd be 1,000 contracts times 20 Digitex tokens, or in other words, 20,000. So you'd have to have a balance of at least 20,000 in your account. Now, this is a pretty reckless way to trade if you just can barely cover that. But again, that's a discussion for another day, another time. So that is the contract size that you're going to select, or the leverage you're going to select for the trade is in this area here. Again, I want to stress that this is not the production interface. This is just a mock-up for this, but I would imagine we're going to see something fairly similar to this going forward in the production version. The next section that we want to get to before we get to the ladder is time and sales. So these are time and sales prints. So you can see that these are actual trades that went through, and this is the price that they went through at. So if the initial, if we're starting down here at 1408.31, we can see that over the last 13 seconds, here are the subsequent trades. And we can see that during this time, the trade initially started at 14,471 and dropped down to 14,444. So again, that is time and sales, and we can see how the price is changing with time. And also you can sort of see it over here on the upper right hand corner, and I have this somewhat trimmed off of the right, but there is a price chart up here, and I'm sure that any interface that Digitex provides is going to have some form of price chart, which you're going to be able to set the different times and candles and the look and the feel of that, as well as any specific studies. Last I heard, they were going to be using a TradingView plugin for this. So that gets us to the last part, and probably the most important part here, which is the ladder interface itself. What on earth is this thing with the blue and the red and the price on it and everything like that? This is one of those things where if you've never seen one of these before, if you've never used one of these before, it's a little confusing. And then after you've used one for about 5 minutes, it's the most intuitive thing that you'll ever use in your life. You'll never want to trade on anything else again in your life after you've used a ladder interface, which is also known as a DOM, or depth of market. A couple of definitions. First, on the blue side or the left side of the ladder, we have the bids. In the middle here in the green is the current price. So this is the current price, in this case, of the Bitcoin futures contract versus the US dollar. So you'll see this going up and down to various prices, right? This is what price discovery is. The price is going up and down. The bids represent people, the bids that are below the current price, these are representing people that want to buy generally. This represents people that want to buy. The offers are in the red column, or the ask. You can hear this referred to as bid ask or bid offer. It all means the same thing. The offers are on the right-hand side. These refer to people above the current price that want to sell at that specific price. So if you think about this as Econ 101, when the offers or the supply meets the demand or the bids, then we have a perfectly priced market. It's priced to perfection. and the market stays stable at that state right there. Everybody agrees on the price. But fortunately, there is rarely agreement on the price. It tends to go up and down, and this is what price discovery is. Okay, so again, bids on the left-hand side, those are people that want to buy. Offers on the right-hand side, those are people that want to sell. And they meet in the middle at where the current price is. So let's go through an example of a trade. Let's say the current price is $14,445, which it is on this static dome, which is not moving, which is not a representative example of the expected production interface of Digitex. But in this example, this static example, let's say that we want to go long. We believe the price is going to go higher in the near future. And when I say the near future, I mean the very near future. And so what I will do is I will click on the bid, and perhaps what I can even do is to say, if the price comes down to the 440 level, then I want to get filled. So if you want to buy in the pullback or buy in an even deeper pullback, this is where you can use a bid which is slightly below where the money is. But let's say that I'm convinced that right now, here and now, I want to go long. And so what I'm going to do is I'm going to hit that bid right there. At 14,445, I'm going to get filled on a long contract, one contract. And what I want to do is I think that the price will just go up to 450, and that's it. And so what I want to do is I want to use the dome or the ladder interface here to say, I want to limit order to sell as the price gets up to 450. These are what's known as ticks. So if you'll see on the white paper, you'll see these referred to as tick. And you'll also see the tick size here. These are worth $5 on the Bitcoin versus US dollar. Now each price increment or each tick means one Digitex token difference of this. So let's go through an example of this. Let's say that we went long at 445 and we sold out at 450 with one contract. So we only had one contract. We made the value of one Digitex token. So you may look at that and say, well, today's price, that's only 2 cents, big deal. Okay, well, you weren't risking very much on the trade either. Let's say instead that we used 100 contracts. So we used a 100 contract size for this. So the initial margin would be, again, 20 Digitex tokens times 100, or 2,000 Digitex tokens would be our initial margin. At today's prices, that would be roughly $40. So again, we're still talking about a very reasonable sum here. And let's say we went long here with 100 contracts and the price sold out up here. So we got a one tick profit on there. And so instead of getting a one Digitex token profit, we now have 100 Digitex token profit, which again, at today's prices would be about a $2 profit for $100 or 100 contracts. So it's very, very simple. If you want to go long, in other words, if you think that the price will rise in the near future, you simply want to work on the bids, depending on whether you want to enter at the current price or wait for a pullback. On the other hand, if you feel that the price is going to go lower in the near future, you would work the offer side. So whether or not you want to sell into a rally or you want to get filled right here and right now and then buy back the position later at a lower price, again, you can easily, this is so ambidextrous, you can go either long or short just as easily, unlike the spot markets where it's very difficult to go short, or in many cases with most brokerages, you cannot go short. So this gives you a whole nother world that you can trade with the Digitex Futures Exchange. All right, so with all the technical stuff out of the way, let's now switch over to talk to Adam Todd, the CEO of Digitex Futures. Hello, everyone, and welcome to Ready, Set, Crypto. I'm very pleased to announce that my guest for this segment is Adam Todd, CEO of Digitex Futures. This will be a commission-free futures exchange, trading Bitcoin, Ethereum, and Litecoin futures contracts, maybe even more than that soon, against their own native cryptocurrency, which is the DGTX token. I personally feel that Digitex has the opportunity to occupy a huge void in the crypto space, and I cannot wait until they're operational. So we've reached out to Adam today to give us the latest dope on how his project's going. Adam, welcome aboard.
Hey, Doc, thanks for having me.
Great. Can you please give us the quick story? Just give us the 2-minute story on why Digitex was founded and what's the problem that you're trying to solve for this market.
Sure. Well, it's very simple. Commissions just ruin everything. You know, I used to be a professional trader in the pits. After that, I was on the screens, and I was paying very, very low commissions. And even then, they would just kill everything. You know, very, very difficult to move forwards when you've got this. The commissions are like a mechanical edge that's always working against you. You know, you've got to make a profit just to break even. So very difficult. Commissions are just this. They're just this drag on liquidity. They're always making people, you know, think twice before doing a trade. So I always just wanted to have this commission-free trading environment. I wanted to somehow create this. It was always a bit of a pipe dream, you know, but then when Ethereum came along and the blockchain, I figured all that out. Then I realized, you know, I started putting this idea together that maybe using blockchain technology, we could create this commission-free trading environment. So that's where it came from. I was kind of scratching my own itch, really.
Awesome. So what existing businesses do you feel that you could disrupt out there in the crypto space?
Obviously, it's going to be the futures exchanges. You know, the commissions that you have to pay are just way too high. I mean, I was just reading the other day, like BITMEX has just moved into the most expensive offices in the world. They're paying $5 million a year in rent.
Well, who do you think's paying for that?
Exactly. That's where your commissions are going. So they can all sit in the corner office lording it over everyone else. So, you know, just things like that, they just irk me a little bit. And I just think we can really disrupt the futures trading space by just, you know, this brand new model that just says, you know, commissions penalize the most active traders. That's what commissions do. And yet it's the most active traders that are the most valuable to the exchange. They're the ones that create the liquidity. They're the ones that we want. So, you know, with our model, this token issuance model, what we're basically doing is we're transferring that cost burden of the exchange, of running the exchange, from the active traders, and we're transferring that to all Digitex token owners in the form of an inflation rate. Because obviously when you issue new tokens, you know, you issue a few new tokens, there's going to be a few percent inflation. Your tokens are worth a little less. So why would Digitex token owners accept that? Why would they be willing to do that? Why do they accept that inflation rate in order to, you know, fund the active traders? Well, they do that on the understanding that those active traders are providing most value. They're providing liquidity. They're providing demand for the Digitex token, which offsets, you know, the cost of the inflation.
It's interesting that you bring up the liquidity point, because I'm not sure if you've seen anything like the XBT or the BTC futures that are currently listed for the CME and the CBOE. The liquidity is absolutely horrible on those things. So they just fly up and down because it's so thin.
I'm not surprised. I mean, the contract size is way too big on the CME. It's like a 5 Bitcoin contract size. You know? And
CME is not for retail at all.
No, and they want like a 50% margin or something ridiculous like that. So you just got to put so much money down. It's not tradable.
So I'll jump right to the end here, but when would a live beta be available to early adopters for your platform?
We've been saying Q4. We're still on track for that. To be honest, Q4 means December, so it's going to be the end of December probably. The programmers, the software development team always want to put it out as late as possible. So the early access waitlist that we're running, the first 5,000 people on that list will get access to the beta version in December.
So is your release schedule still dependent upon the adoption and release of Plasma?
Plasma is critical to the decentralized accounts balances part, and that is looking like it's not going to be ready in time for December. So the beta version will not have the decentralized accounts part, but as soon as Plasma is ready, we're ready to jump on that as fast as possible. But when that's ready, I don't know. They're saying start of 2019. I'm not in the loop there, so I'm not sure.
So if it's not decentralized, would you then have to hold the DGTX tokens?
In the version 1, we are going to do that, yes.
Okay.
In version 1, we're going to hold people's Digitex tokens. But in version 1, in the beta version, the first 5,000 get given free tokens anyway, because we want a friendly test environment. We want friendly testers in case anything does go wrong. We don't expect it to, but in case it does,
Right.
we don't want to lose everybody's money. So the first 5,000 will be playing with free money anyway. So yes, we're going to hold those account balances centrally, but it's money that we gave to them anyway.
Fantastic. So we recently saw some of the glitches that can happen when these leveraged futures exchanges go down for maintenance periods. Like I'm sure you're aware of what happened last week.
Yeah.
With you know who. So
with you know who.
So the problem here with crypto is like you don't even have weekends like Globex does to do patches and maintenance releases and things like that. How on earth are you guys going to do this with, you going to set maintenance windows that customers can't trade on, or how are you going to like change the engine on a moving airplane?
That is a good question. I mean, when it comes to maintenance, we are just going to have to pick an arbitrary time. We're going to have to look at the numbers, see when is the quietest time. But like you say, it's 24/7 and it's global. So, when is the quietest time? We're just going to have to figure that out. There's a lot of little things involved in running something like this. It's a good question. I don't have a good answer for it, but we're just going to try and find the best times and, try and not cock it up.
Okay. Adam, what do you think the biggest risk to your plans is that's beyond your control?
The biggest risk that's beyond my control. I don't think the crypto market's crashing is really a big risk, because as the markets go down, there's going to be a lot of interest in, going short and trading those. So I wouldn't say that a crash in the crypto market is the biggest risk. Something like, I'd say, I don't know whether I should mention that. I'm a little worried about Tether. I mean, what do you think about Tether? I think if something like Tether was found to be a bit of a Ponzi scheme, I'm not saying it is. I don't know that it is. The audits just seem to be a little funny. If something like Tether went down, I think that would just be horrible. The markets would just go into meltdown. Something like that, I would say, like another thing going down as major as that would be the biggest risk.
Actually, I think if we see a black swan, that would just that would get things lit up. That would get us to our final capitulation for this bear. Right now, we're just sort of death by 1,000 cuts.
Yeah, maybe you're right. Yeah, maybe it just gets it out of the way and then we can go up.
Yeah, because people overreact, and then once they step back and they realize what's going on with the situation, they say, oh, we overreacted. Hey, the price is now at a 50% discount. Let's go. So
right.
that always, in my mind, that always gets things rocking. So the whole Tether thing, to me, I think is an overreaction, because you can't even go into your own bank these days and withdraw the money that you have in your bank.
That's true.
Why is that any different from the Tether situation? Perhaps because it's not backed by anything, but still it's the same thing that we've been seeing. But anyway, so my next questions are kind of more trading related here for you, Adam. Mm-hmm. So I've traded Forex pairs before. So the brokers have done this sort of commission-free thing in the past before. They said, hey, you can trade our Forex pairs commission-free. But the problem is the bid-ask spreads are so egregiously enormous that they have to they make their profit on the spread in there. How so you're not going to be playing that game, are you? You're going to be tightening things up, right?
We're not like a Forex setup. We're not making you buy at the offer or sell at the bid. You can put in any price you want. You can bid, you can offer, you can lift offers, you can, hit bids, whatever you want. So it's a completely different model from how those Forex setups are. When in a Forex thing, you're basically trading against the house, right? You're not paying any commissions, but you're trading directly against them. With us, you're not trading directly against us. If you win, you win. That's great. We don't care if you win or lose. Our revenue model comes from the issuance of a small number of new tokens each year, which incidentally is decided democratically by all Digitex token owners. They vote on how many tokens to issue. So that's what covers our costs. That's what pays for the development, the marketing, the support. And whether you win or lose, we don't really care. So it's very different from those Forex setups. You're not trading against us. We don't have an interest in making you lose.
Excellent. Okay, I got a mechanical question for you here. And this, I think I know the answer to this, but this is more for people that are kind of tuning into this for the first time, and they're intimidated by this whole sense of what's a futures contract and how does that work, things like that. And it's funny because I think most people, once they start to understand it, they start to trade with a futures contract, they go, "Oh my God, this is so easy. This is the simplest. This is the simplest thing ever." But the whole notion, the whole industry just sort of, "Oh, a futures contract, that's whales. Oh, those are bad people." It's not like that at all. So follow along with this. So with a minimum tick size of $5 for BTC, which is what I understand that you're doing, minimum tick size. So let's say I go long one contract at 6,400 versus the US dollar. So let's say Bitcoin moves from 6,400 to 6,405 and I'm long that one contract and I sell the position out there. Have I just gained the value of one Digitex token in my account?
Yes. It's very simple. The tick size on the Bitcoin USD futures contract, like you say, is $5, but all your profits and losses are denominated in Digitex tokens. The margin that you post must be in Digitex tokens. Your account balance on our exchange is in Digitex tokens. So this is what creates demand for the token, because traders must own it in order to trade, in order to participate on our commission-free markets. So that's what creates the demand for it. And yes, the tick values of the Bitcoin USD contract, the tick value is one Digitex token. So for every $5 movement up or down, you're making or losing one Digitex token. So it's a very small contract value. It's very easy for very small traders to get involved, and you're going up and down one Digitex token at a time.
Yeah, you're risking 2 cents on that current prices right now, which is actually awesome, because most, even the E-minis are, the smallest E-mini tick size you're going to get is $5, which doesn't sound like much until you all of a sudden rip off a run of several points, and all of a sudden.
Exactly. And then on top of that, you're paying, even if you're paying low commissions, you're paying $4, $5 commissions. That's one full tick on that trade. You got to make one full tick just to break even. And again, that doesn't sound like a lot, but you do 20 trades and you only made 4 ticks profit. It's killed you.
So it almost obviates the need for paper trading then. If you're just risking 2 cents on something like that, you can learn to trade on your platform live, and then it's no different. So what kind of scaling can you do? So you can go, obviously, can you set the quantity of the number of contracts?
You can set the quantity. You can be buying and selling 1 lots, or you can be buying and selling 1,000 lots, whatever you want to buy and sell. Obviously, it's going to depend on the liquidity of the exchange as to how easily you can get in and out of those positions. But with absolute zero commissions and no mechanical edge working against you, I believe that the liquidity of the markets is just going to go through the roof. You're going to get a certain core number of users that are just going to go crazy. They're going to realize that they can pursue these very high volume, low profit margin trading strategies, excuse me, and they can actually make a profit. So I think the liquidity is going to be pretty high up there.
And I think so right out of the gate. Yeah, like I said, man, I can't wait. So
me too. I'm really excited, because we're also going to have our own market makers on there. So from day one, we're going to be keeping the price pretty tight. We have a large bank for the market makers. So really from day one, I expect it to be pretty liquid.
So we're going to be kind of the equivalent liquidity to something like the ES or the S&P E-minis on the bid and the offer.
I would like to think so, yeah. We're certainly going to try our best to keep that bid and the offer, very, very tight. And I'm expecting the first 5,000 users with their free Digitex tokens to get stuck in, because they're going to be trading away. I would like to see. I think the liquidity is going to be pretty good.
Next question here, trading bots. Has anybody approached you about building a trading bot that's going to plug into your API?
There's a couple of guys that are interested in doing market making for us. I'm talking to those now. Our plan was to just have our own automated market makers. But, if these guys want to plug in a market making bot to our API, I don't have any problem with that because they're just going to be creating more liquidity. So I'm gonna see what their ideas are. We don't have anything nailed down yet, but we may have some outside market makers, some third party market makers connecting through the API. Yeah.
Okay, next one here I have for you is about price discovery. Price discovery. So for like the CME, they aggregate the spot price against several exchanges to figure out where the current price is, right? And the CBOE uses Gemini spot price. How are you going to tag or tie into the spot price, or are you going to do your own price discovery and let it match against the spot currencies?
Well, we were going to use there's another index called the Bitcoin average do. It's the global Bitcoin index. I think it's the GBX or something like that. We were going to use that. It's a well respected. All it has to be is a respected number. It just people have to know that it's not being fiddled. They calculate that from the top 50 crypto exchanges or however they do it with their own algorithm. So we might use that. We could use the CME's index if we wanted to use that. We're probably just going to stick with the Bitcoin average one. The thing is with our contract, our Bitcoin futures contract, we actually have the same settlement time and expiry time as the CME's Bitcoin futures contract. So the price action of our contract is actually going to be pretty much exactly the same as the CME's contract, in that sense. So it's going to be easy for people to get their head around that because they can just look at what the CME's price is, and ours is basically going to be a duplicate contract of that, but just in miniature, just very, very miniature version of the CME's contract. Instead of $25 a tick, you're on 2 cents a tick, but the price action and the expiry time is the same.
Well, in my perfect world, what happens is that this exchange becomes so active and so dominant in terms of price discovery that it actually flips around in the opposite direction.
That the tail wagging the dog, that would be great, and I would see that happening too. If we've got 100,000 people trading away like maniacs, that could very well happen.
Well, and I've seen that in the underlying price of whether it's an index or stock. Like the S&P 500 is a great example of that. How it started off as an index of stocks, but then what happened was the S&P futures contract kind of came in and took over. And now the S&P E-mini futures contract is the underlying instrument of the S&P 500. So
it's a monster. Yeah, the volumes are crazy.
In a perfect world, this could actually happen with Digitex, is that you become the driving price discovery of the price of Bitcoin or Ethereum or Litecoin or whatever else. Probably not oil and probably not gold, but in Bitcoin, certainly that's possible.
It could be, and the great benefit of that would be a huge surge in demand for tokens because traders would, liquidity begets liquidity. Traders are attracted to liquidity. So the longer term traders who maybe aren't that interested in commission free because they only trade once a week, they are interested in the massive liquidity of being able to get on and off these huge positions with no slippage, because let's face it, slippage is just as big a problem in trading as commissions. If you can't get in and out, you're done.
And that liquidity fixes that every single time.
Right. And so I think if this model that we're building does create the kind of liquidity that we expect, that is going to attract people, like I say, that weren't maybe attracted to the no commissions thing. They're just attracted to that less slippage.
Okay, fantastic. All right, I got one final question for you, Adam. And this is more of a nerd type question that traders will understand, but I'm used to using an advanced ladder or depth of market interface, which has got, buy stops and sell stops, buy limits, sell limits, advanced trailing functionality on stops. Like if I have multiple contracts on a position, when I get my risk out on the trade, my stop immediately gets thrown up to break even, those kind of things that I can design. Do you guys have any plans for doing any kind of advanced functionality to your dome?
The version 1, the ladder trading interface, is going to have stops. You're going to be able to, right-click stops and things like that. We've purposely stripped down a lot of the tools off the ladder, because a lot of the people that we're after, they're not the institutions, they're not the professional traders, they are more the retail traders that aren't as expert, shall we say, as the professional traders. So there are going to be tools on that ladder, but we have stripped down the first version. There will be more advanced tools coming, but it's not a priority for version 1, no.
Okay. Yeah, I could imagine everybody in Dublin just cringing upon that question, but
yeah, we're always horse trading. Me and the developers, we're always horse trading. What we'll swap for this and that. We're just going to come to an agreement at some point on launch day.
Okay. Hey, Adam, I wanted to thank you for coming on board here and joining us here at Ready Set Crypto, and we'd love to do it again sometime. So
it was my pleasure. Thanks for having me. We got the wait list going right now. If people want to join the wait list, we started that this month only, and we've already got 70,000 people on the wait list.
What's the best way for somebody to get, if they're just hearing about Digitex for the first time today, what's the best way for them to get involved right now, right this second?
Just go to digitexfutures.com. Go have a read of our blog, look through everything that we're doing there, real, good high quality posts that we've got there. Read the blog, read our Telegram. Our social media is blowing up right now. I mean, literally in the last week, our numbers have all just doubled. Telegram's going crazy. We've got 1,800 messages a day going through our Telegram community. We've got, 3 full-time admins on there now. Everything's kicking off with that wait list. There's like 3,000 people a day signing up on the wait list, and we haven't even started the paid ads yet. We haven't even started we've got a new website coming out at the end of this month. I'm demoing the software in Malta at the Malta Blockchain Conference in November. So there's a lot coming up, but yeah, just go to digitexfutures.com and have a look around there.
Okay, fantastic. Adam, thanks very much for your time today.
All right, thanks, Doc. Thanks for having me.
All right, that was my interview with CEO Adam Todd of Digitex Futures. I thought Adam was particularly candid, not only about his forward prospects for the business, but also the challenges that he sees going forward. I am, in full disclosure, a small investor in Digitex tokens and plan on acquiring more in the near future for the reasons that I talked about in this interview. Now, to me, I really see two different plays here with Digitex. One would be as an investor in Digitex Futures or the token itself. Now, you might have gone through the interview and said, what on earth are these futures things, or I just don't really get what he's talking about in terms of liquidity and bid-ask spreads and anything like that. That doesn't matter. So your job as an investor is to determine whether or not you think the forward gains of Digitex Futures are higher than what it's currently priced at right now. But if you're like me, I'm looking forward to having a commission-free futures exchange to be able to trade liquid markets in Bitcoin, Ethereum, Litecoin, and possibly even gold and oil going forward. Commission-free futures trading is nirvana. This is the holy grail of a short-term trader. So in summary, you can really treat this Digitex Futures opportunity as one of two ways: as an investor in the token itself and the company, and as an actual active trader in the Digitex Futures exchange. So folks, what do you think? What do you think about the prospects of Digitex Futures? Let me know in the comments below. If you've enjoyed this video, please subscribe in the button below, and I'll see you in the next video. Thanks. Aside from my soul, there goes a sight, now there goes a sight from my soul, there goes a sight from my soul.